There's one part every AI chip on Earth cannot run without. One company leads the market, and it rivals Samsung as the most valuable business in South Korea. In a few weeks, it starts trading on the Nasdaq, right beside its closest American rival. What happens next will tell you what the market is really paying for AI. Here's the reality. This is a $1 trillion company. Its profit margin is higher than about 99% of the S&P 500. And most American investors have never heard its name. 3 things to watch, and they're connected. 1, why a Korean giant is suddenly crossing the Pacific to list here. 2, what a single comparison on a Nasdaq screen could do to its price. And 3, why the structure of this deal matters more than the headline. We'll get to all 3. Stay with me. Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, which for over 30 years has analyzed more than 11,000 IPOs. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. The company is SK Hynix. In recent weeks, it's rivaled Samsung Electronics as the most valuable listed company in South Korea. Its market value now sits at about $1.2 trillion. And here's why you should care, even if you never buy a single share. When this lists, you'll be able to watch in real time how American investors price a pure AI memory play. That tells you something about the whole sector. It tells you what the market is really paying for AI exposure. This one's for the self-directed investor, the person who wants to see what most people miss until it's already priced in. By the end, you'll understand who they are, why they're listing now, and what to actually watch for. No hype, just a structure. Let me zoom out. For years, memory chips were treated like a commodity, like oil, like corn. The thinking went, prices boom, prices bust, repeat. So the market gave these companies a discount. Think of it like this. For decades, memory was the gravel of the tech world. Necessary, cheap, forgettable. Then AI changed the rules. Modern AI models move enormous amounts of data. Regular memory can't keep up, so the industry built something faster, high bandwidth memory, HBM. It's memory stacked right next to the AI chip so data moves fast enough to keep up. And here's the part that matters. SK Hynix is the global leader in the HBM market, a roughly 56% share by revenue. They got there early, they build it cheaper. They're a key memory partner to NVIDIA, and they supply the chips behind the AI build-out at Google and others. So this is no longer gravel. This is a scarce input, and scarce inputs don't get commodity prices. That's the reframe. That's the whole story behind the listing. Here's what really matters. SK Hynix isn't coming to America for the money. They have the money. They're only floating about 2.5% in the US listing. So why come at all? The re-rating. Let me be clear about what that means. Same company, same earnings, a different price, because a different set of investors is doing the pricing. In Korea, this stock trades among investors who still carry the old commodity mindset. The company said it plainly in its filing. Listing in the US gives it the chance to be valued in line with its American peers. And the peer is Micron. SK Hynix expects that trading alongside Micron will let it be valued the way US memory companies are. When the receipts start trading, funds that already hold Micron are expected to move in quickly, and the stock could reprice sharply. That's the key insight. This deal isn't about raising cash. It's about changing the audience that sets the price. So what do you do with this? First, understand the structure before you touch it. Each common share is expected to be represented by 10 ADRs. An ADR is a certificate that lets you buy a foreign company's stock in US dollars. The ticker will be SKHY. The banks running it are B of A, Citigroup, Goldman Sachs, and JP Morgan. That is strong sponsorship. Note it. It matters. Second, watch the timing. Trading is expected to begin around July 10th, though the company has been clear those dates can move. It lands right around their next earnings report. And some analysts think its operating margin could hit a new record. A strong number arriving as new American buyers show up is a setup worth understanding. Third, and this is the discipline part, don't confuse a great company with a great entry price. Those are two different decisions. A re-rating can happen fast. It can also be front-run by the crowd before you ever get a look. The mistake here isn't missing it. The mistake is chasing it, buying excitement instead of value. Here's how I'd think about it. Decide what the business is worth to you first. Then watch where it opens. Let the price come to your number. Don't bend your number to the price. That's the whole game. Now let me give you the other side, because there always is one. The obvious pushback. If everyone already knows about the re-rating, isn't it priced in? Maybe. That's a fair concern. The crowd front runs the obvious all the time, which is exactly why your entry discipline matters more than your conviction. Second objection, and this one's real. Memory is cyclical, always has been. Today, there's a shortage and prices are strong, but shortages end. Capacity gets built, prices fall. Even premium HBM isn't immune to that cycle. And here's a risk most people miss. Samsung and SK Hynix together now make up more than 40% of Korea's main stock index. That's concentration. If AI data center spending slows, that exposure cuts both ways. So I'm not here to tell you this is a sure thing. Nothing is. I'm telling you what the structure shows and where the real risks sit. That's the difference between a filter and a promoter. I respect the data more than the story. You should too. So here's where we land. Most Americans have never heard of SK Hynix. It leads the market for the scarce ingredient behind the entire AI chip build-out, worth over $1 trillion, and it's about to be repriced by a new set of investors in the U.S. That's the insight. The deal isn't about the cash. It's about who gets to set the price. But knowing that is only half the job. The other half is discipline, deciding what it's worth before the market tells you what it costs. That's the part that compounds. If this is how you want to think about new listings, structure first, hype never, subscribe. Hit like so more investors see it. And if you want the full framework Bill uses to break down deals like this one, pre-orders for his book, The New AI Stock Edge, are linked below. This isn't about chasing the headline. It's about building a system that still works when the noise fades. Don't fall for the name you don't know. Understand the structure, then let the price come to you.